Ravi, good morning. Great having you. Thanks so much for taking the time out. Neeraj here. Maybe start with Coforge and then move on to a question that we would have, a question or two that we would have for the bucket at large or the cohort at large, right? One, your double upgrade shows that you like what Coforge has done. Why do you like it?
So Neeraj, I think that this acquisition tilts a portfolio towards faster growth. So I think and it's completely new technology work that Encora does, and that's and they also work with product startups, which is something that we think can help them go into the healthcare and high tech verticals in BFSI. For example, they work with the mortgage solutions platform. Something like that, you can develop a good sales proposition to get into new customers, new banks. So that's what we expect they can do. So a lot of cross-selling that we expect to see between these firms. And of course, because the portfolio is all new technology, we think it tilts it towards faster growth. And that's why we upgraded. We are actually not looking for a re-rating as such from where it is, right? And even with the faster growth, so if the re-rating happens, that's actually further upside to our target price. We are looking at 34 times, which is what is trading at for FY27. That going into FY28 is what our target price is based on.
Ravi, I was sitting with a couple of buy-side managers yesterday, and we were talking about Coforge, and I was asking them, and the view seemed to be that the growth assumption, the addition of growth that this one will do for Coforge, and the price that Coforge has paid, both of those are fairly stiff, and therefore maybe the current price for Coforge bakes it in. You don't seem to agree with that.
Well, Neeraj, I think that they have paid, I would say, the same EV/EBITDA multiple that Coforge is trading at currently, right? So they've not bought this asset cheap, that's true, but it's a higher margin company compared to Coforge. It's 100% new technology, again, unlike Coforge. So we think that this can actually accelerate the growth. And if you look at Encora's own organic growth, it has been lower, but I think that's because they have been focused on a particular segment of the market, and the last couple of years it's actually been a tough market, right? Even though I think they might have decided to change, it's not easy to try acquire new customers when all that's happening is really vendor consolidation. So getting empaneled as a new vendor would have been difficult, but Coforge's already got a large footprint across, and then they also have a lot of services they can cross-sell. So that's why we think this can be good for both firms. Really, combined entity, I think, will do better than the individual firms separately.
Very good morning, Tamanna here. Do you expect others to follow the script? Because we've spent some time talking about Coforge and what it means for Coforge. The stock has not been really reflecting any of the enthusiasm that you hear in conversations, maybe because of EPS concerns, etc. But do you expect in any case other IT companies, and especially mid-cap IT companies, to follow the same script and look at acquisitions as a way to leapfrog and get in alignment with the whole AI play?
No, I think this is I would say a rather bold acquisition, right? It's much bigger than what I think anyone expected them to do. This is the largest deal, bigger than and if you just look at services, this is bigger than Capco that Wipro has acquired. I'm talking in terms of deal value, not revenue. HCL Tech's products acquisition was actually the second biggest, bigger than Capco, but that was of course a different sort of portfolio that they acquired. I don't think mid-cap companies will acquire something so large. I would expect more sort of tuck-in acquisitions from them generally. The larger firms, TCS has actually been saying that they will now do programmatic M&A. So we would expect them to be more acquisitive. But I don't think we will see such large deals from the mid-cap firms.
What about the larger ones? And then if you had to look at the path over 2026 for, say, the top 3, the top 4, do you think that they are well set so that India maybe next year this time is no longer the anti-AI trade, or will we continue to be?
Actually, I think being the anti-AI trade may not be that bad. And I think that over next year, we will see a slight improvement in growth because at least in BFSI and in high tech, we are starting to see better growth prospects. So I think even that will be enough to change the narrative that IT services is seeing I'd say the impact of AI on revenue growth. That's the narrative. We don't believe that. We think it's just been the technology is changing fast, that clients are not ready to invest for worries of being made obsolete. And secondly, worries about an impending user. Now I think both these things are starting to come off. So technology is starting to be more mature. People are trying to make changes in the customer service segment first. And we will find new use cases, I think, over this year. The coding productivity improvement, I believe that will actually only help, drive a lot more demand. So I'm not negative on the AI impact on IT services. And I think this year we'll actually start seeing that narrative shift.
I remember earlier this year, Ravi had come out with this note when we had done an interview with him, wherein he mentioned how there were a number of factors which made him constructive on the future business opportunities. Now, Ravi, does the opportunity set, still say the same as it was at the beginning or the midway through the year? Simply because things are moving at such a frantic pace that you don't know what changes when, right? Are you constructive Indian IT by and large for a lot of varied reasons which you had highlighted in June or July?
Yes, Neeraj, I think those factors still remain the same. I believe that with such significant changes in hardware, enterprise technology must change. And I do believe that enterprises this time will choose to build rather than buy, because there is, each company will have its own unique use of AI. That's how I think people will try to differentiate. So a lot of, I think, bespoke work that will get required. And a lot of that will be one time as well, because you have to modernize your data, and modernize a lot of the legacy applications. So I think because of that one-time nature of work, we should see a lot of outsourcing contracts come out through this.
I'm just wondering, what are the major headwinds you see, Ravi, for Indian IT going ahead? And we've downplayed, and they have also downplayed to a large extent, everything with H-1B visas, etc. But if you look at the direction of all of the policy coming out of the United States, it doesn't seem like it's going to improve anytime soon. Do you see this as a dampener of any sorts, or do you think that the Indian IT companies that have a large amount of business in the Americas or in the United States specifically are going to be relatively unscathed?
I think even when this rule about this $100,000 was introduced, we were not very negative about it, because I think that it's a it is over 6 years, right? It's not a really, so it's a 6-year long visa, 3 years plus the renewal. It doesn't apply to people who are already there, including on a different visa, like a student visa. So it's, I think, not something that hampers the industry too much. It does incentivize hiring local, but that's something I think that's happened, I think, ever since 2016, when President Trump, in his first term, actually tried to push for more local hiring. I think Indian firms have been localizing. Now you look at it, many of the large cap firms are 65 to more than 80% local. That's the kind of range that broadly you see. The mid-sized companies may be less, but I think nobody's below 50% now. And that's, I think, natural. As you progress, you become a truly global firm, you would hire more locally.
Okay, thank you so much, Ravi, for speaking with us. And I think it's a very timely conversation, because we're going to start the next result season, and already the action is all going to be about what happens in your IT pack. What's your quick 2-line prediction of what the next quarter is going to look like for Indian IT and the big ones in Indian IT, the top 3?
So we are not looking at furloughs being very different from last year.
Right.
Overall, slight improvement in commentary is what we would expect. So I think Q4 can actually be a lot better compared to last year Q4, when we had all the issues relating to tariffs and all that. So I think we the worst is behind us. We should start the new year the results on a positive note.
Okay, that's a good sign. Wish you a very happy new year as well, Ravi. Thank you so much for your time with us here at NDTV Profit. Always a pleasure.